Good morning. It is September 13th, 2023. And today, one of the reasons why the inflation print was up was energy prices. We talked about that in the Longbow arrows this morning. And I want to link it to something that we wrote about yesterday in the Longbow arrows about how the OPEC data shows that there's going to be a 3 million barrel a day shortfall of oil next quarter. So it's starting just in a few months. And perhaps the biggest deficit in a decade. And the Saudis, remember, just extended their cuts. And so that's going to keep pressure up. Hence, inflation is going to stay up. Hence, we're going to have to be monitoring energy relative to rates, relative to duration, all those good things, relative to the soft landing expectation. So, these simple things that we talk about in just a few sentences in the arrows can mean a lot for your portfolio. So make sure to stay tuned and we'll keep you informed and let you know what we think you may need to do. So let's hop over to the dashboard. I loaded it today with a few names and an ETF that I think could be helpful with that. So here I've got energy, the XLE, so that's energy of the S&P 500. It's the ETF, middle of the range. Odds are exactly 1.0 to 1. But you can tell it's moved from, you saw such a bearish move in energy till recently. Now you've got bullish short term, bullish medium term there, and implied volatility premium. So people are a little bit nervous about this. They're paying up for protection. So nothing to do today on the XLE, but this is something to watch to see if this is staying true. Then you keep seeing a bullish formation. It means that the price is holding firm, probably going up, energy prices that is, and therefore you should expect more inflation, which means tougher times for long duration assets, whether those are long duration bonds or they are tech or other types of, call it real estate, utilities, those types of positioning. Got to be a little bit careful then. And I gave you a few names. We've got Exxon, we've got Shell, and BP. BP can be moving around for other reasons that we mentioned in the arrows today. But you can see that they're all in the middle of the range. So here you've got more downside than upside in Exxon and Shell. A little bit more upside to downside just because of the negative CEO news, the fact that he's departing abruptly for personal reasons at the firm. But you can see all of these are showing bullish. These are key energy firms around the world you need to be paying attention to. And what you note from this is that, again, if these are staying in bullish formation, it just means tougher times for long duration assets. It means inflation is stickier. It means consumers have a harder time paying for costs, taking those travel. Obviously, it goes into airlines. It goes into so many different industries that you and I care about. So we want to be watching these things. So we'll show you these along the way. But I did want to point out, after a lot of energy news, what's going on here with some individual names, as well as the XLE. So you, again, all the different points from the macro that we talk about, pull it into fundamentals for the businesses. But then here, I'm giving you the tactical, what's going on, and they're bullish. Nothing to do today. But again, be careful because this relates to lots of other parts of your portfolio. Take care out there, and I'll see you tomorrow.